Yo, yo, we're live here with the agent. How we doing? Hopefully, you guys can hear me. Let's do a quick check. Nice. One of my favorite shows. I'm so excited for this show to come back. Like industry, great, great. All right, industry is back, y'all. I'm excited as ever. Um, Futures just open, so let's take a look. Right, let's take a look to see what's going on with futures. Cool. Ooh, I set up there. Let's see. So let's just see what happened. I mean, we started the year off cool. We started the year off pretty good. I mean, if we look at what all in all is going on, take a quick peek at the markets. I am looking at EM building something there. But the other piece, we can just take a look at the indexes, where we are market wide. Maybe zoom out a bit. Let's see where the futures sits on things, right? Monthly. Let's take a look at the monthly structure. Bitcoin, dollar seems to be down here at just sub 100. It's kind of been here for a little while since mid-year. So I think this may be one of like the more elusive things that I think is really important. I think if dollar appreciation occurs, gold will struggle. And gold is a part of my bull cycles thesis this 2026. So if we consolidated here at this 98 and we push into 102s in kind of 104 range this year, that would be definitely a contrary factor, um, and could be something as like bearish pressure on the gold asset itself, and even more so gold than silver, if anything. But metals as a whole will also take a hit, just roughly, just because of the similarity in the different indexes and context. But yeah, dollar is also something super important. I mean, S&P is on a tear. This thing looks like the what's that? Tyrannosaurus Rex? No, that's T-Rex. The the vegetarian dinosaur. That's what this joint look like. This like the vegetarian dinosaur, just straight, just up. Cool. Um, NQ, Nasdaq's been doing really well. Great bullish momentum, right? The dips were bought. Dips were bought. Like things look great there, honestly. Um, Good consolidation zones as well. This is really constructive stuff here. We consolidate at this 25 level, 25K level. I'm not mad at it. It definitely creates the room for us to push to 27, 28, 30. Same thing with Russell. The Russell, oh man, this thing has done super well. But I think because it has been doing very well, right? Like the last year, it performed extremely well. Um, I say the Russell holds steam for probably like the first 6 months. Um, and yeah, man, face ripper indeed. Russell 2000. This is what like this major confirmation point from a hiking cycle to a cutting cycle. If you are potentially, somewhere, mhm, if you're in the point of view of like you can sit through pain, think about where the hiking cycle started and the cutting cycle did. These things are so tied to rates, it's crazy. And now we have a very, very concrete way of where we think our rates are going, right? And rates, soon as boom, took off. In office, tariffs came through, hit us, gone. Insane. The Dow has been honestly, the Dow has been really quietly also in its monstrous way. I mean, not doing the IWM on the like the time frame basis, but I think it's done really well as well. Like for it to be filled with such old, decrepit companies. Well, I say that bad. Maybe I shouldn't say that. But yeah, transportation. I'm over here joking and stuff, but like transportation's done super insane. Blue chips definitely a part of the move. Um, Metals, like I don't know what else to say. Silver, like oh my goodness, silver. Wow, wow, wow. Anyways, and that's gold. That's silver. And guess who's next? And it's copper. I'm just letting you know now. First stream of the year. Just letting you know now. That's it. Full thesis 2026 right there, done. Catch you on the next one. Like, I feel like it's gonna be one of those. Like, you could just leave it there and it's a movie. Um, Platinum's also done in craziness in its own right. Um, Not as bullish as that on that one, but because I'm not too sure how like it works in comparison to copper, right? Like I think copper outperforms platinum is basically what I'm trying to say. But I may be wrong on that one. But I do think copper is gonna have an insane year, regardless of anything. Japan's market, this is the Nikkei. Sheesh. And they're raising rates, by the way. They went from negative rates, and the prime minister, a woman prime minister, matter of fact, first one, um, she's raising rates, which is going to be great. It's going to allow the economy to actually digest what's going on, I think. But I mean, maybe I don't know enough about Japanese economics. Um, Oil has been another story. Been super interesting here. Just seeing oil stay so flat for so long and just in this downward sloping wedge for quite some time. I mean, the prices I was paying for gas back in 2022 was exorbitant. So I'm happy to see a $6 a barrel, I guess. Not that I drive anymore, but hey, pay it forward, I guess, right? Like I paid the price so y'all could vibe. But too busy dealing with New York public transport. Um, but that's something super interesting as well, right? Because this whole Venezuela thing is supposed to be a part of this. Like uh the Trump administration is really, really focused on um, you know, onshoring oil as well. I'm not gonna argue this is my expertise. I don't really know where this sits for real. Um, I think something happens here, but I don't really know it yet. Like, I don't know what happens here, right? Like, I'm hearing the Venezuelan oil is very different from oil from the Middle East and such and other European countries because the Venezuelan oil is really, really thick and it actually requires more refining to become like usable oil. And I don't even know what that right. I'm dead. Sorry. Right? Ah, it's hilarious, yo. Um, yeah, okay. The people in Houston are used. Okay, that's what's up. I mean, it seems like Houston's gonna be up. You know what I mean? They might have to change it from the Texans back to the Oilers. You know what I mean? Like, I mean, football team may have to go back to the Oilers. But I do think there's gonna be some great deal of companies that are doing some great like stuff and able to probably get some deals going. Like that's probably where I would be focused on this. I think right now it's a point of caution and I'm following the news flow surrounding it. Right? Like, for example, oh actually, which one was it? I think I saw some flow. No, not this one. No, 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 no. On this company, I'm trying to remember. Dang. I'm gonna go find it. I'm gonna remember. I'm gonna remember it. I'm gonna go find it. But um I believe it was a Colombian oil company. And I was like, interesting. This is well beyond your unusual activity. Um, EC, not BC. Okay, boom. EC. I saw this past week. Saw some pretty interesting flow here on this one. The company is Columbia. Whoa, 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 whoa. Metric, speak properly. Hold on. There we go. It's an ADR, integrated oil company. Oh wait, this chart not even showing nothing. Um, I'm just wondering if we're getting to see some lower lows put in, um, and maybe some news comes within this, and we squeeze out of this range, right? Like this long-standing range that we've been in and penning up and getting closer and closer, getting higher lows, high intentions in the region, especially in regards to oil. Um, I don't know. Like it's literally not. This is me just trying to find things and connect some dots and marry some data. But I did see some flow showing end of Feb or the monthly February calls at $11 strike. The spec, so like it's $50 a contract. You know, it's not that much, but this particular order was 226K in premium. Um, and didn't really see much beyond that on the name, right? But it was something that made me say, wait a second. It had some active lines as well. Yeah, that was the major sweep, EC. Um, but I think the active lines on the day after that as well was the May 12, 15 strike. Like, okay, actually, let me show you that one as well. Boom. Active lines are looking pretty interesting as a whole. Um, and that was something that I was looking at. I'm like, that's something here. So I'm watching this OI, these OIs at this February and the 5.6, 6.7. I need to see this. Oh, sorry, actually, yeah. I need to see if we step into 10K on these OI and maybe 7.5 on this February exposure for the 11 strike. Like that's something that would interest me to see if there's still adding into this like news, into whatever it could be. That's something there. That's a story. Um, what else has been super interesting to me? I kind of want to go over some data, believe it or not. So let's go over some data. Oh, the memory madness. Oh boy, the memory showdown. Like you're looking at SanDisk right now. Oh my gosh, like that's a rocket ship, straight up. That, bro. This is a rocket ship. Like, you serious right now? 50 to 377 in 150 days. Rocket ship. So that's been something I'm watching as well. Um, I don't really know. Right now, I'm still writing up the 2026 market outlook. If anybody would like to receive that, please, feel free to follow me on Instagram, Nedrick, Nedrick is where I'm there. I'll probably be posting a link to it shortly, probably sometime there. It's just so that we can get a view off. There's a few names that I really like as well, and a few themes. I've been really interested in trying to see like what happens in the world, right? Because I saw some of these indexes actually outperform. I've seen several indexes actually outperform, or like nation indexes per se, have outperformed the US markets in the past year. And that's something that was pretty interesting to me. So that's also kind of as to why I'm liking the emerging markets and stuff at the moment for the time being. Thank you, honey. The sauces. All right. Okay. Yeah. All right. All right. Cool. Yeah. Um, what other names do we have here? South Korean index, bonkers. Like it's volatile as ever. Like it could fall off a cliff. But boy, oh boy, is it running. Um, what, just this past year? What did it do? 111%. That's effectively like the way I'm comparing it is like that's their SPY. You know what I mean? That's their QQQ, South Korea. And technologically standing, they're killing it with Samsung and I believe also SK Hynix, if I'm pronouncing that properly. Hynix or Hinks, Shinks? Nah. But they're a DRAM company, flash chips. They're definitely a part of this memory super cycle, and they are helping lead it. Um, it seems like they were a spinoff from Hyundai, possibly. I don't know that one. I don't know that as a fact per se, but I think they were. Um, a lot of these names kind of fit, you know. We're dealing with the global memory complex took another violent leg last week, as you guys saw, like positive supply demand data points and comments coming out back and forth between Jensen at the CES, um, talking about how the AI industry is fueled by explosive and it needs to move higher. I mean, that's effectively it. It's been the same story we've seen this whole time. Um, yeah. From a flow perspective on institutional activity, it got skewed better than like usual. Kind of like, um, and I think global retail is kind of here as well. So it's not just institutions. This is one of those weird potential alignments where I think retail is here and institutions at the same time. Um, if we look at several like buy sell ratings as well too, like oh man, we talk about like the movement of standard deviations per like sector and such. Um, there it is. So we just took a look at what we're seeing sector wise. So let's look over the view bigger point. The 20-day standard move standard deviation that we're seeing across all US equities is currently negative. We're seeing some macro products being a bit negative. Single stocks is basically flat. Industrials seem to be the only one that has a positive 5-day and positive 20-day by so much. Utilities is also there, at both of them being positive. And so those are the main two sectors that seem to be like exponentially growing. But industrials being the 5-day being two standard deviations away. Mm, it's interesting. And financials are roughly like about a half a standard deviation away in the selling in the shorter time frame. So basically, what that shows now, like, what do we have there? Materials is also on the shorter time frame, been on the downside. Staples have been non-existent. Like, who needs staples when you can pick a random name and it goes up 30%? Mm. I like to look and see, like, where's the money going? What do the flows actually look like? So that's something to keep in mind. Software versus semis, I guess more questions, more answers, really in that point. Um, Software is down 7.5%. Think software is gonna have some issues this year, with like selling at least like SaaS software, just because like I think I've been hearing some chatter like ServiceNow and like maybe Workday, some of those companies I'm not too keen on, I think, in terms of how well they will perform relative to other risk on assets for the future. Um, I do think Amazon's gonna be one of them ones. If we're talking Mag 7, like mega cap bad boys, Amazon's gonna be one of the ones. I can't remember where I saw the graph, but I need to find that data point again. But I think that maybe the year that like they may like get within like 10% of headcount, like robotic headcount will be like within 10% of human headcount, which is kind of crazy, but it is, I guess, the way we're going, right? Mm. Trying to see what else. What other data can I find? Got tons of growth estimates. Look at this. Wow. And look at that. This is where it explains why and how, like, the IWM and the Russell 2000 are outperforming and doing insane numbers right now for like, look at that earnings. Sheesh. Oh, sorry. I guess my head is in the way on the thing. There we go. I'll put it right there. Take a look at that. Growth estimates are insane. What sauces were there? Yep, you can see me. Okay. 11? Okay. I'm a proud shareholder of Coca-Cola shares. Mm. So, I mean, I think I have a lot more to say, like when more information come out, but it's kind of the same of the same stuff. Just because we're in a new year doesn't mean things change, but the change is a bit more progressive. It'll take some time. Um, there's this retail part that seems to be doing really well, and I'm not sure I fully understand it, but I do think it looks pretty cool. Um, this discretionary versus systematic funds seems to be like a lot more systematic positioning um, than there is like on the discretionary side. But I mean, that kind of shows like where we think the orders are. Like, are the orders kind of more programmatic in that way, or are they more intuitive and like attached to feelings and so on? Thoughts on Meta? Hmm. This one. Um. So it's saying it's the weighted average Z scores for position indicating. So basically saying like I to my understanding, or at least my like point of it is how far away you are from neutral. Um, Mhm. Yep. That's kind of the way I'm viewing it, at least. Like systematic positioning is way more bullish right now than retail, and like discretionary positioning. Um, the thing I find super interesting is like I like to try to see how things perform during panic points and panic zones, and like the tariff showed how the systematic went and made sure very quickly to get bearish, as opposed to retail and discretion. You know, but my thoughts on Meta, honestly, I don't even know. I feel like they're kind of on some dark horse stuff. Like I do have this technical setup on it, right? Like it looks technically sound in this fashion, but I feel like we're like 3 years in the game on AI, and I still don't know what Meta does to actually move the needle with AI, other than hire a bunch of people. You know what I mean? Like we've seen them hire a ton of people and throw crazy packages at people. I guess, but maybe they're cooking something in the background. Maybe they're like cooking like a Instagram like crazy monetary play, like how they monetize WhatsApp dramatically. Like something gonna revolutionize. I don't know, but like so I'd really like to maybe get a peek, some kind of understanding on like what they want to do with this. Maybe that can help me out. Um, I'm not sure really, but I'm thinking maybe like some type of a partnership with ChatGPT to like redirect marketing so that people can sell better and have better ad placement on Instagram. I don't know. But I mean, aside from that, I know things are selling. Um, I just say I'm not that attracted to it. It's not like it's not a big win to me right now. Some things may unfold on there and like explain like why Meta is the way it is, and like and this whole down period will be maybe something compared to Google's down period. And then we thought it was a joke, and then they came through and was like, no, actually, boom, this, that, that, boom, increased margins, 23%. Woo. Like maybe. I just would like to find my way to that. And my research doesn't bring me there quite yet. Um, Microsoft is down because everybody's using it. Like when you're trading Microsoft, you're not trading Microsoft anymore. You're trading OpenAI. You're trading ChatGPT because of that partnership. So anytime the sentiment changes on ChatGPT, that's why Microsoft's getting sit here in the shitter. That's the only reason why. The question mark of can they pay their commitments and all that whole stuff is sitting in Microsoft's price. That's why. Um, I can most definitely see that. Um, oh, want to talk some news? Um, Trump was talking about 10% cap on credit card APR. So that's pretty cool if that goes through with some executive order, I think. So I'm thinking maybe names like Affirm get a really attractive bid here. Like people hitting them over the head and they're at 90 in a week, like face ripping. Um, and it may start tomorrow with market open, but it needs to have continuing news flow to keep that energy, that perception, that value add there as well, so that we can continue to see that movement and keep pushing that up and so on. But um, the buy now, pay later scene may take a huge, like, pardon me, bump up because the banks may now get hit, right? In a way that buy now, pay later may not get hit. Because I don't think they're even operating at like 10% fees. But it effectively means that these banks may be mm, credit card issuers, actually. If anything, maybe even Amex may get hit on this. Because I guess when you really think about it, like without the fees and the people that like don't pay their full bill off in the cycle and people that pay interest, that's what makes all the lounge stuff possible, really. Like airport lounges, all the perks that you get, my digital like display stuff, like that whole shebang, that's what allows it to happen. Because that extra 10 or 20% or 10% on top of whatever he's saying, like that's all profit for them. It then bring back. I believe somewhere I read that like Delta paid Amex, I believe correctly, like 7 billion in a year. And I think Delta's operating income is like 6.2 billion. So they using that debt to drive the customer through. Mm-hmm. Mm-hmm. Exactly, bro. Delinquency is what drives these huge companies like American Express. Let me see what other ones. Like people that just does Discover have a ticker? Come on, y'all, help me out. I don't know. I think it does. Because Discovery, I guess, is considered to be like subprime in a way. Um, Within the time frame of things, I think Trump is trying to sacrifice the corporate credit card side of things and fuel the home buying sector side of things. Because now he can control, in a way, rates with the new Fed chair that comes in, I believe, the middle of next month or something like that, or maybe even the end of February, around there. And then he probably steps in, or whoever they are, and then maybe do a rate cut almost immediately. So let's say by March, we already have a rate cut on top of what we already have, and then maybe a 50 cut instead of a 25 like we usually do to dramatically reduce the debt service that the US government has to place on the debt. And that drives mortgages, that drives like that realm of financial and loan and ownership and debt world, and then cuts back on the cumulative credit card side of things, as their profitability will get cut with this 10% cap. So it's almost like owning banks is not the only way to express this properly. It also depends on his ability to actually execute on those things and continue the legislation that's needed to do those things. Otherwise, it's just going to be a pop and a drop, you know? So, right. So, like, I think American Express gets hurt way more than a BlackRock does, you know what I mean? By this case. And a firm ends up being extremely um, in favor of this new adjustment of some sort. Or, and also, you know what, too? SoFi. Because debt now, can you think about it? Debt now becomes to look like, if I could get a singular loan for 20,000 at an 8% interest rate, that's way cheaper than 20% on my credit card and having a 10K credit line. You know, like, so it starts to turn these other companies that provide these alternative debt assets for individuals and businesses as like the gold mine opportunity, because a segment of their customer base has now reopened to them. Um, mm, REITs, let's see. I think so. I'm just wondering which ones. Um, I think it's definitely a way to like play it with REITs. I don't know if any one particular one is going to be the bomb, you know. Let's see. I'm trying to remember a few. Mm, O. O is one, but I think O is more realty. I think O is they get more of their income from like strip malls and stuff, not really single family home purchases and stuff. Um, let's check. Never mind. Let's see what else. Our portfolio, yeah. What do you have in your portfolio here? Yeah, they got these kind of things. I don't really know if this right. These are like shopping commerce areas. It really depends on which REIT you go for. The REIT needs to have um oh, like in terms of how to play this whole bond situation, for sure. Definitely you could do builders, but yeah, like maybe materials as well, right? Materials definitely comes back to like us kind of talking about metals, even with copper and so on. Um, but I think XHB, the ETF, is that it? No, come on, bro. I'm getting rusty. Oh, I did not know my ticket. Oh, I was right. Never mind. XHB, right? The home builders ETF. That could be how it could build. Like right now, it's sitting like this. I think it looks pretty good. I guess I started a thesis on this, but I didn't finish it out because it's just like two lines. But yeah, this looks relatively good. Home builders ETF could be one a way to play it. XHB. Um, also could be mortgage originators. Yeah, exactly. RKT, Rocket Money, right? This is a bad dude right here. Okay. Uh, LDI, Loan Depot. They may have a pop as well. Like the financing side of things. Um, what else? Lending Club, LC. I think they were also doing pretty well. Yep. Like seeing this name come through with some good sweeps on it. What else? I think I have some somewhere on a list somewhere. Mm, mm. Construction materials. Look at this. This is cement company. I don't remember where this is from or like where the company is because it's an ADR, but oh, Mexico. It seems like oh, I guess they're really everywhere. Dang, but headquartered in Mexico. Okay, like this thing went from 5 to 12 in 5 months. Yeah, like this bad boy is not playing games, right? Like actually, sheesh. Oh wow, okay. Did not know that. They own Carib Cement in Jamaica. Okay. Yeah, honestly, this, whoa, I may need to double check on this. Like, do I have any flow? I'm watching for dips on this name. Like, this is pretty interesting. I like this. Let's take you again. CX. Let's see if I have any flow on this. Oh, good old Mexican cement play came for feet. Okay, cool. Boom. On January 9th, we had some people targeting open interest changes. So that morning, we had some people targeting the April 14s on the name and some February 13s. Wow, almost two. Oh, what's up over here? Oh, this is a quarterly positioning. Okay. Like 90,000 OI is huge. Some people probably trimming, seeing some take profit there at the 67 on the open interest change. Um, you also have some more people down here. Where are these guys at? Not so much open interest change, but like the open interest still is relatively higher. Somebody's got an 11 put. Still a decent amount of that there. So maybe this is playing the pullback because these 11 orders probably were all placed on the ask because it's 100%. Um, or they may be doing a spread on this position here, but the calls are heavily outweighing the puts in this whole scenario, and the total net change is like 10,000 new in the open interest. So that's super interesting to me to see. I want to see some more flow come in on this and like really push this like ahead, so that maybe it could take a quick trip back into 1090, 1080, 11-ish range, allow a dip buy so I could take it on the next train to 14. Um, that's gonna be definitely a name I need to put on the watch. So let's see. As materials huge, like as we said, um, as well. Mm, 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 mm. Mm, okay, let's kind of see what's going on this week. I think this week we got. Hmm, what is this week? We got some earnings, I think, which is going to be super interesting to see what their earnings are talking about. Because we start off with banks usually. That's another piece. Um, mhm. And also, like to compare with the other thesis that I was mentioning about like the whole world and the entirety of markets doing craziness. Um, if we just look at the global equities, the flow of equities globally, like look at this, y'all. Global flow, like we're talking in the teens, like 330 billion is the 4 week average, with an increasing 1 year average as well. Like we're doing numbers globally. Um, let me, oh, sorry, I need the time period on that one. I need to change that real quick. My fault, y'all. There you go. You've also got tech share of equity sector fund assets. Um, I bet you can probably guess what that looks like, right? Like that's oh, what that peak is on the global fund. Yeah, I mean 40, 41 bill in 2021. I mean, it makes sense, right? Global flow and equity. I mean, equities, like everybody had money in 2021 because the government turned the printers on. Every government turned the printers on. Everybody did. That's the only way to get out that one. Turn the printers on. Now, unleash the cash. Let people just buy their way out of the issue, right? That's like, um, it's a heavy, heavy piece there. The tech share of equity assets, huge stuff. So basically for this week, Monday, the volatility watch is, I think, ASTS and UCLO. Those guys have been getting some pretty upward volume momentous moves. The most overbought stocks per the 14-day relative strength index or fold, FOLD, STTK, Shutter Clubs, DVAX, and the most oversold ones in the last 14-day RSI seem to be some companies to keep a watch for. We got some dividend, ex-dividend dates coming up for AT&T, Verizon, Comcast, Abbott Labs. For um, it says Walmart and Google's Wing program 15th. Wing says the rollout runs through 2027, and once complete, the service will operate with, excuse me, from more than 270 Walmart stores, uh, reach about 40 million people globally, roughly 10% of the US population. Sorry, not globally, but you get what I mean. Um, the markets are mad. That mixed with some other pieces, I could definitely see where things get spicy for Walmart. Um, there's some like retail conference called ICR conference that starts like the wave of like holiday sales updates from last year and how well the companies will do going into this year, like a full year kind of guidance. So keep an eye, right? Like I just mentioned about Walmart, WMT, like they may marry the news cycle with their technical setup. Um, and I think Walmart's already doing great. $114. Maybe it doesn't dip because of this conference, and they're going to talk about how crazy they did last holiday. Eye out for some of the names like Aeropostale, um, Urban Outfitters, Shake Shack, Yeti. Even look at Yeti. Like, let's see what look at these guys. Like, they haven't done well like 2024, but last year into now, Yeti has done pretty good. Pretty good. Like, I'm not, they haven't done amazing, but 27% is still basically outperforming. You know what I mean? Like, that's still great work. Yeti something to watch for. What else we got? Oh, the 4-day JP Morgan Health Conference begins in San Francisco. The conference is considered to be basically like the biggest one in healthcare. So Johnson and Johnson may go through the news cycle. Novartis, NVS, AstraZeneca, uh, Bristol Myers Squibb, BMY. Um, maybe some comments from the FDA commissioner about AI drug development potentially, or regulatory priorities that they may be going through, stuff like that. Uh, Also, keep an eye out on NVO and what they're doing with their product. That may be something to keep an eye out for. Maybe there's something mentioned for that company. Nova Disc, I think it's called. Yeah. Oh, actually, wait a second. Like, I'm seeing all these reports about retail. I'm remembering seeing all these flow about retail. XRB? Is that the ticker? XRB? Retail XRB. No, that's the Canadian Real Return Bond Index? No, Nedrick. No, no, not that one. Um, what's the no? iShares Retail ETF. What is that one called? I think it's called. I think it has an R in it for sure. What? IYC? No, it's not that one. That's not the one I'm talking about. Dang, I can't find it. But I promise you, I saw some crazy sweeps on it. Let's see. Mm, Hmm, XRT. That's what it is. Bet XRT. Retail ETF was hot. And look at it. It's been hot. Retail is pushing. They're absolutely jumping. XRT. Let's see if I got any here. There we go. Boom. I got some good flow. People tackling 94 with good decent size on it for next month. 94, good decent size. Yeah, I think this was a string of multi-sweep orders. Yep. This goes out and confirms that. Like they're talking about 94 February. Even in June, they're talking about 100, right? Like, oh yeah, FCX has a ton of room this year. FCX has a ton of room. Same way how I just showed what we're seeing in metals. Like, I think gold ran, not saying that it's moved up handsomely, it's moved up well, but it hasn't gone. Geopolitical tension issues, question marks, um, are going to lead to, as well as the amount of demand that is needed for it to build out AI compute and all the other pieces. It's going to be huge. I think I may be, I don't know, trying to think like what else is there to it? You know, just thinking really. Um, but yeah, retail also still poised to do some damage here. So I really wonder how that's going to look. Um, I guess, you got GDP looking good, forecasting for higher. I think they're talking, they even Atlanta Fed GDP projections are coming in at like almost 5% for the coming year, which is pretty strong. Um, what else we got? Investors digesting, I guess, December payrolls, 50,000 jobs added. We were kind of expecting 70, only 50,000 was added. We're still waiting on the Supreme Court ruling on tariffs. That may be something to keep an eye out for volatility to protect yourself. Which is also pretty interesting as to like I don't know. This is maybe more strategy than like actual economics and understanding of things, but like maybe Trump is front running some of these good financial news points so that he can create room for if tariffs do get hit. Because remember when we had tariffs, we first talked about it, market fell, everybody hated it. They're like, oh my God, 100% on some random island country we don't know anything about? Like, it was crazy. And then we started seeing the revenues from it, and people kind of were like, "Oh, tariffs, yo, yeah, I kind of like them." Not people as in humans and everyday individuals, but investors and economists. They're like, "Oh, tariffs are kind of a cool little arm of revenue that we can use, I guess, especially with all this debt that we have, right? 37 trillion, 38 trillion." So, so that's what that's what they were looking for, and then the question mark of if we can keep the tariffs because the tariffs aren't lawful, how they're enacted, how they're like put into place. When we started having the question mark of the Supreme Court being able to have the power to say, "Yo, we should turn this off," and we have to pay it all back to everybody that we collected on, um, the markets didn't like that, and we saw some selling. So that's something that we want to keep sharp for because if Supreme Court does somehow say like, "Oh, well, you know, maybe something along the lines of it is illegal and you have to return everything back. And like that, the current cash that we have in the vault at the treasury, will have to be remitted back to the individual that paid it. And then secondly, that also means however many few billion, I guess I don't really remember the stat on that, but I think something like 20 billion. Hey, what's up? What's up? I think somewhere along the fence of that, like the 20 billion that we had that had to be paid in tariffs will probably have to get paid back. So um I'm sitting here wondering, like, hmm, it may not be like something that people want to see, for the market to be able to react in that way, in that fashion. So that may be something to like keep an eye out for. Uh, Also, so maybe Trump's kind of front running the good news, so we can create some space so that when we do come back on the news of failure potentially, we at least already went to made some new highs. We have space now to get there. So that's something super interesting to kind of see. I'm not really sure how well it's going to actually hold up, um, but that's that really. Um, well, to like watch and protect your positioning and stuff is that we're stepping into earnings season, guys. Earnings season is fully upon us soon. So some of the flow is going to get muddy, right? It's not going to be the perfectly clean flow that we're kind of used to, where we're able to catch random, like, oh, wait, what you guys doing? Okay, cool. Like, and they find real winners and gems that aren't really like, those guys are going to be a bit harder to find essentially than where we currently sit, because people are going to be placing bets everywhere and start paying attention a little bit more to the earnings positioning around around a much larger equity position, right? Around maybe a hedge towards a current way. Like it's going to be so much harder to actually read, um than kind of how it is right now, right? So something to keep in mind as well as a protection point of view. Um, so that's kind of it. I mean, honestly, that's pretty much it for me, guys. That's kind of it. I mean, I don't want to really get too deep into individual names per se. I'm gonna drop the 2026 research report soon, and we'll talk through that. I mean, like Druckenmiller said, yeah, you gotta invest first and investigate later. So some of these positions on the names in the 2026 list are already active. So just something to keep in mind. But I'll catch you all next time. Agent out.